Hello, very good afternoon to all you wonderful traders, all you beautiful ladies, all you handsome gentlemen. Welcome to our daily live stream brought to you by DCFX Asia, and I am yours truly, Abe Layman, coming from Central Java, Indonesia, live. Okay, so uh, it was quite a rocking and rolling event last night. The Yankees came back to the market because on Monday they were having holidays. So yesterday they came back to the market as soon as the New York bell opens. It was going. It was high volatility. It was good for scalpers, but for trend followers, it can be a bit tricky. We got spooked by gold because initially, before New York opens, gold shows some bullish strength, but eventually, dollar index came back strong, and the golden bulls got hammered by the golden bears, and it was sliding way down. So, will the Swiss National Bank and the Bank of England will upend the status quo tomorrow? That's what we're gonna find out today. We're gonna discuss. We are going to discuss what kind of rate numbers coming out from SNB and the BOE. Okay, so let's start with the economic calendar tomorrow. Okay, so today is Wednesday, the 21st of June. About 2 hours or 3 hours earlier, the pound sterling came out numbers for the CPI year on year, which registered a number of 8.7% from an expected number of 8.4%. It becomes positive. Core CPI is at 7.1% above the expected number of 6.8%, also turns positive. The public sector net borrowing numbers went to 19.2 billion against expected number of 19.8, which is positive. Well, people borrow less, so the bank have more spare to more cash, more spare cash. I think. Frankly, those numbers to me, it's not really a big issue because what's more important is the reaction of the market. Our main concern is usually the reaction to the market, and how do we anticipate market's reaction and how much can we make out of the opportunities. All right, so uh, the data for CPI of the pound sterling GBP was supposed to be bullish for pound sterling, but do you know what's happening to pound sterling now? It's like down. So for today, the first testimony for Federal Reserve Chairman Jerome Powell to Congress, which starts at 9 p.m. later tonight, and we can expect some high volatility because we don't know whether the Congress are happy with the way the economy of the US is performing after the job done by the Federal Reserve by increasing the rates. And remember, last week we had a anticlimax because the numbers for the unemployment went high unexpectedly, and it caused a stir in the Federal Reserve, who were thinking of cutting rates. But because of the unemployment numbers, they might want to change their mind to increase the rate coming up in July. which is next month. But well, let them discuss. Then we see how's the response from them, from the market. Then we anticipate. Then what's more important is coming up tomorrow. Um, we have the Swiss National Bank an hour and a half before we go live. The Swiss National Bank currently has a interest rate of 1.5%. So the expected number for the rate will be 1.75 or 2.0. It could be either one. It's either 25 basis points or 50 basis points. If it's gonna be 50 basis points, then the expectation is that the Swiss will go strong, will go bullish. So when you look at dollar Swiss, the dollar is in front, the Swiss is at the back. If the Swiss is strong, where do you think the chart of the USD Swiss gonna go? Up or down? Should be down. See, when the Swiss is strong, the dollar is weak, then the reflection of the chart should be going down. So that means that Swiss is strong. So when dollar Swiss is going down, where do you think gold will go? Of course, it will go up, right? So we'll find out tomorrow. That is about 2:30 in the afternoon, my time, 3:30 your time. Then comes 6 p.m. my time, 7 p.m. Your time. The BOE of Bank of England, they gonna have the official bank rate votes. So the MPC will decide whether they want to go for a 50 basis points or 25 basis points. Remember, they have quite a large number of inflation compared to their interest rates, right? So if they learn from the Federal Reserve, what they have done is by increasing the rates and the inflation numbers magically goes down. So SNB and BOE might want to do the same. Okay, so that's the fundamental side of things. Let's see what news we can share with you. Yep. One moment, please. Let me just. Mm. So, this is the preview of the Swiss National Bank's policy rate. It is expected to be 25 basis points. Well, they are quite happy with 25 basis points, but if it's going to be more than that, so 25 basis points will strengthen the Swiss quite a bit. 50 basis points will make it strong, make it much stronger. So that's the expectations. And looking at the goals of the SNB by on the inflation numbers, they want it to go at 2%. Then they might want to increase it to uh, by 25 basis points or a 50 basis points. If it's 50 basis points, it will be 2% interest rates against a 2% inflation rate, 2.2%. Currently, the Swiss interest rate is at 1.5%, and the inflation rate is at 2.2%. Right? So, will the Swiss National Bank go by 25 or 50 basis points? We'll find out tomorrow. So, expect to see the dollar Swiss goes south side. It might play out today, but sometimes it might just go up first before it comes down. Well, or maybe it could be a calm before the storm. Just watch the markets, and then you decide what to do based on how the market react. Okay, so next is the BOE. Let's take a look at what is in store for BOE. So, can the BOE SNB hike by 50 basis points? Well, let's take a look at the consumer price index, which was issued earlier today. It gives some confidence that the pound sterling may be going bullish, but unfortunately, after seeing those numbers, pound sterling did not go up. It slid down much lower, creating new day lows every 15 minutes. So it can be scary. Uh, and this is the Bank of England policy rate. Will they be bold enough to hike by 50 basis points in June to get a grip of inflation? Well, the lesson learned is the US managed to do it because Federal Reserve has been doing rate hikes from early this year until middle of this year, and the inflation numbers went down from a double digit to a single digit, and now the inflation rate is lower than the interest rate. So it seemed to work. Okay, will BOE take a cue from there and follow suit? We'll find out tomorrow. But at the moment, excuse me, the PCI numbers are CPI numbers are not helping the state of affairs for the pound sterling. Okay, so let's take a look at the economic data, or rather economic numbers. Okay, now United Kingdom currently is running its interest rate at 4.5%, then the inflation rate of 8.7%, almost double. With a jobless rate of 3.8% from a population of 67.53 million people. Right? That's the current condition of the United Kingdom. Supposedly, or if they decide to go for a 50 basis points, we are looking at interest rate at 5%. Now, will the inflation rate goes down to less than 8.7? It's anybody's guess. The numbers today does not reflect that, so we'll have to wait and see. Next, let's take a look at Switzerland here. The current interest rate is at 1.5%, right? So if they go up by 25 basis points, it will be 1.75. If they go up by 50 basis points, it will be 2% against an inflation number of 2.2%, jobless rate 1.9%, and from a population of only 8.74 million people. So it's a very small country, but they have most of large banks there, and it was supposed to be a neutral country during the World War II, but now we're not too sure what's their position at the moment. So, well, will Swiss National Bank increase the rate by a 50 basis points or a 25 basis points? It's a guessing game, and I'm not good at guessing games. So what I'll do is I'll wait for the see what numbers comes out and what's the reaction of the market, and from there I'll decide based on the trade setups available. If there's no trade setups, then I don't trade. If there is a trade setup, then I trade. Okay, so uh, what's next? Let's take a look at the um, dollar index to see what has happened yesterday. Okay, because like it or not, the US dollar, is still the base currency for most of the trades in the world. Okay, here we go. Right, this is the dollar index daily chart, and it has been a very tiring week. Come midweek, we have 3 bullish days, and today's high is lower than yesterday's high. And by the way, yesterday's high is at the 50% mark of last month's high low. So, will the bulls come back for the dollar index? There are signs, but I'm not pretty sure. Why there are signs? See, when we see a spin top below the 20 bottom band, it is a bullish reversal, right? And 1, 2, 3 candles is the morning star. But the confirmation candle, which is here, this is a spin top. Say a spin top and a doji works like the traffic light, meaning you see a red light, okay, you stop, whether you want to continue or not. So you wait for the next light. Is it going to be a green, a bullish candle? Then you go, right? It becomes a bearish candle, negative, so you make a U-turn. But at the moment, it's pretty hazy, no clear signal. Let's take a look at H4 if it can tell us a better story. Can we see a better picture in H4? All right, let's shift this a bit so you can see a clearer picture and enlarge this. Okay, so what we are seeing now, based on H4, there is a weekly channel cross coming up in about 45 minutes, because each H4 candle changes at every 1 o'clock, 5, and 9 o'clock, my time. Your time, those at GMT plus 8, will be at 2, 6, and 10 o'clock. Okay, right. So in 45 minutes time, this current candle will be done, and we will have a new candle. If the following candle, the next candle opens above 102.590, that is a good chance that it's going bullish. And take a look at the momentum line. It's showing a bullish momentum. Why? Because the MA10 is above the mid band of 15 BB and above the mid band of 20 BB. So there is bullish momentum. But if we look up above, the trend line or the trend ribbon is showing bearishness, right? If you shift your focus to the left, see, it was a bearish trend. It went down further. It was supposed to be a bullish trend, but it went down further, and it got flipped only on Tuesday or Tuesday night. Okay, so uh, looking at the angle of inclination, it is a very lazy bull that's in the dollar index. And looking at H4, um, they basically not pretty sure whether they have enough strength to go up or not. So it's more of a wait and see, right? Well, before a high impact data tomorrow, so things may be calm today, or economists or big boys may want to shake the market. They might come in during the New York hours. And don't forget, tonight, I think we have Jerome Powell's testimony, which may shake the market at 9 p.m. Okay, so that is for the dollar index. Next, what's gonna happen is we're gonna take a look at the other markets that's affected by the dollar index, and I think by this time we should say hi to our audience. Wow, Lisaya, hi Lisaya, welcome back. New, good afternoon. Hello New, welcome back New, and welcome back Gold Walker. Hello, late yeah? No lah, not late. You're just in time, not too bad. All right, so Smith JT has a question. SNB and BOE, what's this? I don't know. can tell me clearly? Sure. SNB is Swiss National Bank. Is the central bank of Switzerland. Okay. Now, BOE is Bank of England, the central bank of Great Britain, United Kingdom. Okay, Smith, that's it. What's next? New. Thanks for the explanation. Well done. So it's about Swiss and GBP. Yes, my friend, it is Forex. Correct. Well done. So let's take a look at what's happening to GBP, Great Britain pound, because there was the CPI numbers, and like I said, the numbers were positive, but the reaction was negative. Oh, I have a position in DAX, and it's currently having a floating rate or a floating profit of, okay, it's still, let the market work, let the order work, and let's take a look at pound sterling. Right, see, the data was released 3 hours ago. Let's take a look at each one. Right, it went up, then the bulls say false alarm, go back, and the bears came back, and he's been sliding down and down and down. Well, it could be the big boys are playing, but technically, when we see prices going way past the MA 125, it is a sign of weakness, and the previous day low is at 1.27131. Currently, it's trading at 1.27078. So it is a sign of weakness. Let's take a look at the daily chart for pound sterling. All right. So what we're having is a 3-day decline for the pound sterling beginning from Monday. So last week, the bulls were here for about 2 weeks, all right? For the month of June, the bears came a while, disappears after 3 days, and then the bulls are in the market, and it has pushed up the pound sterling from a level of 1.236 all the way up to 1.284. Substantial hike, but now it's pulling back. The current pullback runs at about 30%, which is pretty healthy. And see, there is the high of May at this level, 1.26973. There you are. Okay. So for today, pound sterling may want to test to that level and hover on that level and wait for tomorrow's uh, rate announcement by the BOE. If the reaction is positive, then we'll see the British bulls coming back to the market. Okay, so, and the trend ribbon is telling us that the trend is bullish with a good degree of inclination. The momentum candles and the momentum line telling us that the bullish momentum is in the market. So it is a bullish trend. What's happening today since Monday, 3 days of counter trend. And this counter trend is very healthy, and it's going to run to about 40% retracement until it reaches this level, the month of May's high at 1.26793. Okay, so you want to buy pound sterling? Not yet. Gotta wait. You want to sell pound sterling? Maybe. If you take a look at a smaller time frame. All right. So let's take a look at H4. All right. So H4, what's happening here is that the bears are kind of tired also, and technically there's the weekly Fibo as well as the weekly channel acting as a support. So 1.27091 will be a good support. So because the next target from here, the next support will be at 1.26793. At this level, this will be the last support, and the price will be ranging around here the next 3-4 hours until New York opens. Let's take a look at the H1 chart. Okay, H1 chart tells us that there is a potential reversal happening, and we have to wait until this candle, the current candle, which will close in about 34 minutes, to form. If it form as it is now, then you are looking at a hammer, or a hammer. If it gets smaller, then it becomes a dragonfly. Well, if the dragonfly is formed and it's positioned at the bottom band, there is a possibility of a bullish reversal. And let's take a look at the smaller time frame from H1. Let's take a look at M15 for a clearer, small time frame picture. Okay, so there have been 3 attempts for a bullish reversal. The first attempt, we have a harami. The, the second attempt, another harami, but it's an inverted dragonfly. And the current third attempt, 15 minutes. So in about 2 minutes, this candle will be formed. It's another harami. So 1, 2, 3 bullish harami, and pound sterling has not reacted yet. So you gotta wait in about 20 minutes, 15 minutes. Sorry, in 2 minutes, we have to see how the candle turns out, and then from there, another 10 minutes to decide whether the bulls are back in town. So pound sterling, it is bullish, but it is doing a pullback, a retracement. So for those who wants to go long on pound sterling, wait. For those who wants to short pound sterling, better not, because they are in the potential side of a bullish reversal. Okay, so well, you may ask, say, why cannot trade? You can. I'm not stopping you to trade. You can, but the risk of being caught is higher if you are not prepared to wait. So, and I know boring can be, trading can be boring because you simply have to wait for the right moment. Because when the moment comes and you are not prepared, then it will not be good. But if you wait and you do your plan, first you plan your trade and you wait for the right moment when the trade setup presents itself, then you will have a clearer picture. Then you'll be more confident to trade. Right. Let's focus on the top right chart, which is pound sterling 30 minutes. Let's enlarge this. Now, you see the similarity between the M30 and the H1. What is the similarity? You have a inverted hammer. Okay, now it changed. Now it has, it's 4:30 my time. Every 30 minutes, M30 change one candle. M15 adds another candle, and M5 adds another candle. M5 is telling us that the piercing pattern and the this is the piercing pattern plus the Bollinger Band turning up. Okay, so I feel confident that the pound sterling may want to do a reversal, but now it's 4:30. I'll wait 15 more minutes to be sure, because yes, H1, H4 telling us that they have reached the bottom band. So when you want to buy, it's good to be at the bottom band of BB20. And I think we have a quite a good signal. It's trying to do a reversal. How much? $100. Okay. What the risk? I buy pound sterling. My stop loss level is at the low point, which is here, and well, I think $182 will be good risk to take. So, and the reversal might bring the price up to about here because the trend ribbon is there, right? So let the order do the work, and I can continue doing my other job. Okay, ladies and gentlemen. So that's the pound sterling. Now let's take a look at Swiss because the SNB will have their rate announcement tomorrow. Right. See, when we see a declining trend based on dollar Swiss, it shows that the Swiss is getting stronger and the dollar is getting weaker. Okay, it is a downtrend. Last month, it became a counter trend. It rebounded to about 40% of the decline from March. March and April, it went down by as much as 5,950 points. And in May, it rebounded by 3,300 points. And in June, it's extending its bearish trend. So, can we expect the SNB's announcements be the impetus or the X factor that will make the Swiss stronger? So when Swiss gets stronger, dollar Swiss will go down. So when dollar Swiss go down, meaning the dollar go down, gold go up. Okay, so looking at the daily chart, the momentum shows bearish momentum. The trend is also showing bearishness. So we can expect dollar Swiss to be declining further. So a weakening dollar will make the other asset classes that is traded against dollar go higher. All right. So H4 H4 is telling us that the trend is still bearish because the trend ribbon shows bearishness. The momentum line about to show a bearish momentum because yesterday or last week it had a counter trend which is ending by today. Yesterday it tried to end, not possible. Maybe today it will end. Let's take a look at H1. Right. It's clear that H1 is telling us that the bears are in dollar Swiss. So it might want to go sideways. It might want to wait for the Yankees to come in. So we are looking at resistance at this level 0.89806. So you want to sell Swiss, you can wait up to this level or could be higher. But with the targets looking at the first target at 89616 and the next resistance target will be at 89417. Yes, it might be possible during the New York hours. Okay, so and looking at this tower, this is the bearish Morobozu. Bearish Morobozu covers both the 15 and 20 mid bands. In fact, it went from the top band to the bottom band. So it shows that the bears are in town. So the bears may want to go dancing further to the south. It may come during the New York hours. So it's about 2-3 hours time. We have a resistance level here, 89808. Then the support level will be at 09618. The first target, second target will be at 89417. We have to wait to during the New York hours to see what's happening. So we have a bearish Swiss. There you are. Okay, so now it's up to the audience again. Gold Walker, LM 740 pounds down. LM, I'm I'm $740 down. Well, were you buying or selling Gold Walker? Okay, next, Smith JT. Now, what should I do? Buy or sell? Well, my friend, I cannot tell you what to do. I can show you where the market is going. You decide what to do. Okay? All right? Desire, have I said hi to you? Yeah. Okay, Desire, it's clear market will go down. Retrace was necessary but didn't happen. Sell strong. Oh, you're referring to gold. Okay. Let's take a look at gold. Uh, well, Desire, uh, yes, the trend are bearish, all right, but if you take a look at M15, what's happening now is a double bottom beam form. Okay, so the double bottom at this level, let's see what's the target like. 579 points. Excuse me, sorry. So this cute double bottom, if it reverses, it will go past the MA 125 to this level at 1942. Okay, so that might happen coming 1 to 2 hours, right? Uh, you may say that, look, it's bearish. Yes, it is bearish. Let's take a look at a smaller time frame, right? See what goal is trying to do is trying to push the trend ribbon. As you can see, the trend ribbon a very narrow angle is pretty almost flat, right? And the bull momentum has already been confirmed, so the bulls might want to enter the market, but this is either a baby bull or a lazy bull because they are pushing very gently. They are waiting for the Yankees to come in to show some strength. I bet the smaller time frame may have a clearer picture. Okay, so this is M1. Can see that the trend ribbon is all flat and the trend ribbon is about to flip. So for the next half an hour, prices have to stay above 1934.60 or 1934.50 to be sure that the bulls are in town, and then the trend ribbon will flip. Then that will be the early signal of a bulls in gold will be around. Sorry, an early signal that gold will go bullish. Okay, but don't take my word for it. Uh, this is based on my reading of the charts. Right? So just watch. For those of you who thinks it is bearish, yes, the trend, the bigger time frame trend is all showing bearishness. Only the M1 time frame is showing that it's about to, it's a bit bullish, and the M5 is telling us M5 and M15 shows us a double bottom, right? So see the trend is more or less gently being slopey. It's not a big angle, so it is a mixed emotion at the moment because see for the past for the whole day, gold has been traded only at uh, a range of less than $10, only $8.50. So very small range, all right? So uh, the Yankees may want to change that later when New York opens, right? So looking at these, all the time frames, they are showing bearishness, bearish trend. M5 and M5, M15 shows that it's about to do a rebound. H1 is telling us that the bulls and the bears are in peace. So in the market at the moment, the crabs, H1. So that's why it has been moving for the past 12 hours sideways. Will it continue? Well, take a look at H4. See, H4 is giving us some hints based on the lows. Okay, let's enlarge this. See, these three candle, the low, this is the lowest for this week. All right, this is the low of last week. This is the low of this week. And yesterday's low, one candle before this low was higher than the previous low. And the current candle's low is higher than the previous candle's low. So that is one way of looking. When you have a higher low, meaning the selling pressure has eased a bit, so the buyers are in the market, not that strong yet. Maybe later. Let's take a look at the daily chart. Why is it not strong to push gold further down? See, we have the 20 BB bottom band, and then we have the low of May, which is at 1931.94. It already tested yesterday and today. Today it rebounded. And then there is the almighty MA 125 waiting to be tested at 1924.80. It got tested last week. It rebounded almost immediately. It's like a dead cat bounce. Toing, oing, went up. Today, it only tested the low of May and it rebounded. So it is also being supported by the 15 BB bottom band. Yes, it's about to do a bullish reversal because at the moment the momentum may show bearishness, but the 15 and 20 BB mid band is all stuck. So there's no clear signal based for the daily chart. They're not sure whether they want to continue further down or they want to go up, right? So the smaller time frames telling us that it is about to turn. The M1 and M5 is telling us it's about to turn. M15 also telling us it's about to turn. H1, it's telling us that they have reached an oversold position. So if it's oversold, people change their perception or change their views from bearish to bullish. Okay, so I wouldn't want to argue if you guys think it is bearish. Yes, I agree, it is bearish based on my trend on the trend ribbon for M1 and M5 up to H4. But the daily chart, it's still bullish, but the bulls are not in the market yet. It's the crabs. For the month of June, this whole month, the bulls don't come, the bears don't come. For the daily chart, it's just the crabs, they're going sideways. And it is usually an indication that a large move is about to happen. When? Just wait and see. Maybe tomorrow, when SNB and the BOE have their rates announcement. Okay, so that's it for gold. And what else do we have? New. I like to trade euro. Did SNB and BOE will affect? Oh, okay, new. Well, euro is, well, sorry, Swiss and UK is in the European. Well, UK is an island of the European continent. All right, Swiss is part of the European continent, and Swiss has maintained its currency against the euro. Uh, so will BOE and SNB affect the euro? Yes, it might. The spillover effect, yes, it can happen, but not directly. So when the Bank of England decides to go 50 basis points, then pound sterling gets strong, then the spillover might help euro to move up a bit. Or when the Swiss National Bank makes the currency, the Swiss franc becomes strong, the dollar Swiss chart will go down, then it shows the weakness of the dollar. So when the dollar is weak, pound sterling, euro becomes strong. It goes the other way, it goes up. That's how it moves. Okay, I hope it's clear. New. Today's meeting, FMC or FOMC, gold can move fast. Peter Pan. Hey, Peter, welcome back. Nice to have you again. Gold can move fast. FOMC today is there? Oh yeah. The FOMC meeting. See, the problem with FOMC, I wouldn't say the problem. The issue with Fed talk is that they like to create hype, create euphoria to get people to listen to them. Well, the media in the US works a very unique way. Sure, there are some etiquettes which they have to observe and they have to be responsible. They have to do some responsible reporting. But sometimes economists or analysts are given bonuses to to report on good news, whether the data is good or bad. All right. So, yeah, differing opinions will always occur. Okay. And so influential people may want to appear and tell a good news that the dollar is strong so that the dollar index can maintain or rather can withstand the influx of the strong Swiss. But um, technically, is the US economy really that strong? That is anybody's guess. But from our analysis, we can see that the dollar index took a dive for most of this month. The last 3 days, yes, it tried to recover, and the recovery is less than 3%, which is not that healthy. If it's going up to 40%, okay, I might agree. I might say that the dollar may have reserve strength. Okay, so Peter, today's FOMC gold can move fast. Yes, because no, not because of the FOMC meeting. More like Jerome Powell's testimony to Congress, which is at 9 p.m. So be prepared to see rocking and rolling, some roller coasters movement after 9 p.m. when the Jerome Powell's testimony to the Congress to tell them the results of their meetings. The FOMC is Federal Open Market Committee. So they will discuss what's happening and they will come out with policies on how to stabilize the economy or how to strengthen the dollar. Those are macroeconomic policies which will not affect the layman or the guy on the street, the working man, almost immediately. It will not be that. It will not be an immediate effect. It may take time for the policies to be absorbed by the market. But who's going to move the market are institutions, banks, right? Brokerage, prime brokers. They are the big boys, right? Because they are trading by the billions of dollars or maybe more. Okay, so they might move the market to a certain degree. To control the market, it's an impossible thing. To move the market, yes, 10-15 minutes, that's how much money they can afford to. And that's how much time they can have on the market. More than that, the market is too big, right? You want to know the current turnover for the OTC markets that we are trading is about $7.5 trillion per day. Yeah, that much. So $1 trillion. I'm sure we may know there may be a trillionaire. I'm not sure whether there is, but possible, or a family who controls or who owns, who have $1 trillion. It could be a family, it could be an institution, but individual, not sure. Billionaires, yeah, there are plenty, quite a number. Millionaires, yeah, almost everywhere. So those are the guys that may want to move the market, or are able to move the market to a certain degree, to a certain extent, to a certain period of time, not more than 15 minutes. Ah, you can't do that. See, that is why the market is regulated. Why? Because so that it is a fair and level playing field where everybody has equal opportunities. Even for small guy like me, I trade one lot at a time. Now, as you can see, I have two lots running. Let's take a look at my positions. Oops, both are running at a loss. Let's see what is DAX doing. Is it still okay? All right, worth the fight. See, this is yesterday's mid level. This is the MA75. And I see the top band is coming down. Okay, pretty safe. That's on DAX. Pound sterling, I did go long on pound sterling. Oh, done. Okay. I entered too early. Well, it's okay. Just wait for the DAX to show some profits. Maybe later. All right. So let's take a look at the any more questions? Right. So, like I said, uh, today, what's gonna happen is in Walmart day. Where are you? Okay, right. Pound sterling CBI industrial order expectations. Oh, so they are waiting for these numbers to appear in about 5 minutes. And right, remember this at 9 p.m. See, FOMC members, there are so many members. Everybody is allowed to speak. So Fed speak sometimes can be misleading. Right? Look, man, I would do the same, because if I'm representing an institution that can make lives better for more people, I will tell a good story, but I will not do window dressing based on numbers. You see, because that can be misleading, and the Federal Bureau of Labor Statistics, or BLS, has got a bad reputation, because they have in the past done window dressing to the employment numbers to make it as if the employment changes were all positive, but in actual fact it wasn't. So it was a big surprise, right? So but they still it is a very popular thing, the NFP, non-farm payroll. And well, because the euphoria is always there for an NFP and it will not go away, well, they will still use that numbers again. So Fed speak. What's more important is the testimony of Jerome Powell, representing the Federal Reserve, in his testimony to the Congress, whether what they have done, the fiscal, the monetary fiscal policies that have been in place are really working that well, and are the markets really displaying the effects of the policy, excuse me, of the policy at the moment. When we look at the numbers, high interest rate is much, their interest rate is higher than the inflation rate, and but then the unemployment numbers, unemployment claims has been high. It should be less. See, the issue with the US employment is, and I think in most other countries who have adopted or adapted to the digital economy, is they have jobs available, and they have job seekers. Between the job seekers and the jobs, there is a bridge, meaning the job requires certain qualification from the applicants, and that applicants does not have the necessary qualifications. So the job applicants remain unemployed, and the job openings remain unfilled because the qualifications is not there, and an employer wouldn't want to take an employee for the sake of employing, even without the proper qualification. I don't think that will happen. Okay, so retraining has to take place, and technology, communication technology, the Internet of Things has changed a lot changed a lot, and has proven that digital economy is the way to go. We can learn a lot from the World Wide Web. All you need is time. Can you spare the time to read and learn? Just like trading, if you want to learn about trading, there's so many websites, but be careful. Some of them are misleading. You decide what is good for you. All right, just the more you read, the better you know, and don't believe anything that I say. Read more, seek the truth. Only then you'll find out what we are doing, is it good or not. All right, so we have come to the end of today's session, and yeah, Adrian, okay. So you're really late, but anyway, I'll just share with you what oil is doing, since you are an audience that always attend. Let's take a look at oil for 2 minutes and see what's happening. Okay, now looking at oil, these two are oil. This is WTI daily, and this is the Brent daily, and it has a potential reversal happening, because for Brent you have a support here at 75.34. This is the low of last year, right? So this level will be a support, and there is a monthly channel cross right on the candle itself. Yes, it is bullish. We can, and when the Swiss National Bank decides to make the Swiss strong, that means the dollar will go down. When dollar goes down, oil will go up. So I'm bullish on oil. Until this week, we may see a high of around 77, 78. Okay, oil is about to rise. That is based on Brent, based on WTI. It's the same thing, right? The low for WTI last year is at 72.51, and that is the support. Currently, the momentum line is telling us that the bulls are in town. So, when the bulls are in town, the push for oil may go up to here, 73.54. The first level. Next is 74.50, and finally 75.60. Ouch. I don't like oil go up, because my petrol bills will go up also. Anyway, that is happening, what's happening to oil. And well, ladies and gentlemen, Adrian, I hope it is useful for you. And thank you for watching. Ladies and gentlemen, thank you all for watching us. If you think we are good enough, please come on, give me the thumbs up, my friend. Please give me the thumbs up and tell your friends about us and be a subscriber. We are here every day, Mondays to Fridays. So, time to sign off. Abe Layman signing off. Thank you, everyone. Have a pleasant evening. Whatever you do, don't worry. Be happy, stay healthy, and please trade wisely. God bless. Goodbye, everyone.